What's happening, bulls? Happy Thursday. Bitcoin's in a bit of a weird situation at the moment. Let's dive in. We're going to talk mainly technical analysis right here. I'll give you a bit of a masterclass, a bit of an understanding on liquidity zones and what the price action means, what this all means. Because one candle in this chart, one candle equals 4 hours. So if one candle equals 4 hours, then you could imagine that this much. Where are we? Time is 21 days. So 21 days it's been trending downtrend, signified by lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Big liquidation. So typically something that's going to take a lot of people's money. For example, late shorters that are waiting for a big dump. And they just get wrecked because most people use over 20x leverage. So 20x leverage is going to get wrecked by anything more than a 5% move. And it moves on by that. So you can divide it. You could divide the leverage by, get 100, number 100, divide that by the leverage. That'll tell you the percentage amount that it needs to move to destroy that, and it's actually typically a little bit less than that because the exchanges don't want to lose any money. If you're following, what we're looking at here is the Bitcoin price, like I said, on a 4-hour time frame. So if we zoom out a little bit to another chart, 12-hour chart, okay, what do we see here? We see the same thing but further out with thicker bars, something that's better to look at. If we go here and drag this like that, what do you see here? You see a price range. You see a big rectangle that has held over 80% of all price action in easily. Okay, that's a range, sideways range. So price ranges for approximately across all assets, approximately, give or take a lot, 70% of the time it ranges, goes sideways. Okay, 30% of the time it trends hard. They're the moves that you want to be a part of. People that are in and out of markets, they often miss those trending moves. That's why they say time in the market beats timing the market, because if you are spending time in the market, then you're going to be around for this move. If you're trying to, short, long, short, oh shit, I missed it. That's very, very common. Big range, big trend, another range. So sideways price action looks pretty easy. So it starts there, right? Range expands as volatility expands. And then we have something like that. All right, so another range. When prices break ranges, you can count your bottom dollar that in majority of cases it's just going to come back into the range. Okay, so that's where all the breakout traders get wrecked. That's where all the liquidity comes in. That's where everybody FOMOs, loses, or gets feared out of their positions. They lose. So most breakouts are fake outs. When breakouts often do continue, it's after one, the range has been alive for a while. 2, there's low volatility, contraction, getting ready for an expansion. Or 3, the price action is attacking the ranges consistently. So, for example, in this one here, if we zoom back into that 4-hour chart where I was, you can see a few things going on. Now, this over here, during this trending move, is called a knot. If you look at Charles Bukowski's Encyclopedia of Chart Patterns, famous book, covers the knot a lot. The knot is a new liquidity zone that is created in between ranges. This is the liquidity zone right here. This is the knot. Now, as you can see, let's have a little look. Bear with me. I'm going to learn a thing here. Alright, watch this. Ready? Here we go. So there's a range. What happens with the knot is it works as the number one area for support. So as you can see, price ran up here for a while, and eventually, in majority of cases, the knot will be tested or at least touched. This is why knots are fantastic longing opportunities in a majority of cases. So this is where you want to be longing. If you can identify a knot and you're patient enough and reduce FOMO and wait for the knot to be touched, or you could even set buy orders here. Now, after the knot gets touched, let's walk through it. After the knot gets touched, it gets attempted to be untied. So just imagine it's a knot. Look at this. Ready? Knot. Continues on. Now tries to untie the knot. The knot has been sitting here for 10th of July. So 3 weeks. The knot's getting old, crusty, and strong. It attempted to untie the knot. The knot was too tight. It failed. It didn't want it enough. Price continues on, back into the range. I'm getting to show you something very important soon. Ranging, price is ranging, continues to range, misses the knot. This is the knot down here, remember? So I'm just going to color the knot something differently here. Look, the knot. Let's just put it white for now. Okay, this is the knot. So it gets touched once, back into the range, retests the range, the floor of the range, price continues on. Keep looking. Comes back down for the knot. Inevitably wants to try and attack it again. If the range lives for long enough, the knot will get attacked again. This is the way. Continues, comes down, hits the knot again, but yet again it's been another 3 weeks, give or take. Hits the knot, super tight, bang, straight off the knot. We longed this in the copy trade in the Telegram, and we made some gains, great gains. Now, what happened here? It came at the knot again. Hot, heavy, fast. There was some fat fingers market selling, and it didn't give the knot enough time to tighten yet again. So loosened it and then broke it. Okay, so the knot got broken, as you can see here. Big long wicks over a weekend. So Monday, which was Sunday in America, was typically where the knots are the weakest. Any price action's the weakest. The order books are the thinnest. Unties the knot. Okay, you can unties the knot. Now it's under the knot. So that means it's coming back into this range. Alright, it's coming back into the range. Now what it's looking for here, first case. So this does not mean that the range above is over. There is no certainties and definites in price action. All right, but what this does mean is that it's hunting for more liquidity. Okay, so just think of this like this. Ready? Picture you coming into the market to long. You're a longer, longs only. If you longed it right here, where are you putting your stop loss? Okay, you're a greedy longer. You're probably going to put your stop loss under here or in here. You're looking for previous price action. If you longed it here, where are you going to put it? If you longed it here, where are you going to put the stop loss? You're going to put it under the previous support of the price action right here. Bang, hits it. If you longed any of this, where are you going to put it? Under the previous support, previous price action. What gets hit? The previous price action. If you longed anything here, where are you going to put the stop loss? You're going to put it under here, the previous lowest price action, but as close as you can, so you can use maximum leverage. When it gets hit, same shit. People just putting stop losses. Now, where is the holy grail of all stop losses of the people that are still in the trade that caught a big long breakout, or they were sensible enough to avoid the range? Where's the stop loss is going to be? It's going to be right here under the breakout point. This is where the price breakout. This was where the range decided it was going to be broken. This is where volatility collapsed. Candles got tight. Volatility collapsed. Candles got tight. And price action broke the range and turned into an uptrend, a strong uptrend. This is the holy grail of all stop losses. This is where the smart stop losses are. This is where the original stop losses are. This is where on the 11th of July, this is where all the stop losses were caught on. Remember, this is a 4-hour chart. So this is days, few days. There's a lot of trades. Trades are going on every couple of seconds, every second, every millisecond, every couple of milliseconds. Trades are happening. Every couple of milliseconds, trades are happening. Everyone's putting stop losses somewhere. They're putting it here. The holy grail of stop losses. This is it. Anyways, once the knot and that wasn't enough liquidity, it's just hunting liquidity. It's just hunting stop losses. It's just hunting losses. Just think of the market as just this beast, this big snake that needs to feed, and it comes down and it goes up and it comes down and it feeds on all the greedy rats, all the fat rats that had their stop losses too tight. It's just eating them up. Ran out of fat rats. Big snake needs more. Wants to get the neighborhood. Wants to get your dog. There's your dog under here. All right. And the snake's coming for it. Bounce from the knot. Nah. Boom. There it is. It just ate Fluffy. And then it ate Keith, Big Keith, the old dog. And here we are. All right, it hit it's not a coincidence that the price stopped dead in its tracks here and hit it twice. This is where smart money put their buys. Once they see the knot get broken, it's where smart money puts their buys. And this is where the juiciest of all juicy, fat cat stop losses are. Now, so the price is coming up. It's back above this range. It's in somewhat no man's land, more or less no man's land. It's a tough area. Simple as that. It's a tough area, right? So it's hit those stop losses. It's come up and it's trying to get back into this range, which is here. It's more or less got rejected from it. It's hitting the knot. The knot's starting to turn into resistance. There are many factors at play right now. So this is part of the video, is that it's a crucial time. You can see here, you can draw a channel very similar to how you draw a range. Just encapsulate 80% plus of all price action. So you can see here all the downtrend breakout lovers are excited about this. So what you're hoping for here literally is just a bounce, retest, which could be in front run right now, retest off this top of this channel, top of this range, and then a re-entry into this range. So if Bitcoin comes back up and reclaims 13k, where's the thumb? Where's well, here, sorry, here we go. Boom. That'll do. And so that's what you're hoping for. Alright, if it comes back down into this range again, we're busted. Alright, it's gonna come down to the bottom of this range, most likely down to the low 100s, 102, 103. So that's gonna slow altcoin season down significantly. Alright, so there you go, there's the update. This is crucial time, part of the video. I know everyone's just like, oh, is it going to go up or down? Like, why are you making a video when you're not certain of something? But this is why I'm making the video, because this is a very crucial time. You can see 113k back into the range. Happy days, going to see it come to, most likely going to see it hit range highs, come all the way back up here. If it doesn't, breaks back down into this area, into this range, back under the 110s. You know, adios. It's going to come down to the range lows. Okay, so it's just ranges. All right, so if it comes back in here, comes up in here, then you're going to play this. If it comes back down in here, gets stuck in here, you're going to play this. Happy days. Talk soon. Talk to you tomorrow. Ta-ta. Have a good sleep.